Futures are pointing to more gains ahead of the start of trading this week. 132-point gain on the Dow futures. The NASDAQ 100 futures unchanged at the moment. This following major gains on Friday's strong jobs report. 2.5 million jobs created during the month of May. Economists were expecting a loss of 8 million jobs. Joining me now, Mahoney Asset Management CEO Ken Mahoney, and also joining the conversation all morning long, pollster and president of Maslansky & Partners, Lee Carter, Moody's Capital Markets chief economist John Lonsky, and PwC partner Mitch Rochelle. Welcome, one and all. Ken, to you first. Can the market keep this up, particularly ahead of this Fed meeting this week, midweek?
It is quite incredible. This is the ultimate bungee jump market, right? Straight down, where the market was setting records to find a bear market 17 trading days later. And then the last 50 trading days go 37%. So it's like a perfect V. Look, I think the market's ahead of itself. I think most people think that as well. We are a little overbought here, but you have to be careful. FOMO is something very interesting. FOMO, fear of missing out. That momentum that you have behind this, even the futures of this morning kind of show that momentum could really run a lot further than most people think they can run.
Well, if investors are buying stocks, Mitch, because of fear of missing out, if one thing or two things go wrong, it means that they can head in the other direction, does it not, and sell? Mitch?
Yep. Hello.
Go ahead.
Yeah, I think the first thing that the investors are going to look to is the wording that comes out of Chairman Powell's mouth, because a lot of what's driving this market forward and propping it up to some degree is all the stimulus coming from the Fed. So if it looks like they're continuing to buy treasuries and buy mortgage-backed securities, and they're going to keep doing that for a while, I think the market's going to continue to react this way.
John Lonsky, to what the markets have done, the economy, we were talking about on Friday, and Charles Payne hit on this, that the markets have been telling people that jobs were going to come back much quicker. And that indeed is something that we saw Friday. Economists, your ilk, if you will, John Lonsky, thought that we were going to lose 8 million jobs. Nevertheless, we still have unemployment, if you look at the U6, which is underemployment as well, which is more than 1 in 5 Americans in the labor force can't get work or enough work. So is the market overdoing it in terms of a speedy recovery for the economy?
Well, I think what the market is most interested in is just the attainment of recurring growth, that we can get recurring improvement, and that is what economists expect. I hope they're right with this longer-term GDP outlook, more right on that than they were with the jobs report for the month of May. That was the greatest miss ever, by the way, in my mind. Moreover, let's not forget, interest rates are expected to remain very low. If we go back, the last time we had a 0% Fed funds rate, we didn't hike Fed funds until 7 years had passed, by which time the unemployment rate, excuse me?
No, keep going.
By which time,
keep talking,
by
John.
which time the unemployment rate was under 5%. We have a ways to go yet. So low interest rates are going to underpin this equity market indefinitely.
Ken, we were talking about the V-shaped recovery. V-shaped meaning that it was a sharp drop in economic activity and then a sharp pullback, if you will. So the recovery ends up looking like a V rather than a W, or I think a swoosh was one way that economists were describing it. What are some concerns that you're watching for in terms of the data? Because John Lonsky was mentioning 0% interest rates, low interest rates, but it's a lot more that the Fed has done in terms of blowing its balance sheet out.
Look, I hope to think, and what the market's trying to sniff out, that this is a second quarter event, just one quarter. It's almost like a company having a bad quarter and taking big write-downs and write-offs and saying, okay, you know what, let's clean ourselves up and go forward. I don't think the Fed's going to change their tune. I mean, look, the Fed on April 9th said they're going to buy pretty much everything, including items at a garage sale. So why would they stop there? And then he doubled down on the 60 Minutes about a week and a half later. So I don't expect him to change his tune, especially while we're seeing a lot of fits and starts. While the market is ahead of itself, the economy still has a grind here. Again, you're seeing some states, kind of the infection spiking. You're seeing other states where we're flattening the curve. So I think that, the Fed governor still sees this, and we're not going to be kind of herky-jerky policy, turn on, raise rates, lower rates. I think it's going to stay pretty much right here, and I would say through the end of the year for that matter.
Lee, just really quickly before we go, a lot of people I talk to, they might have jobs, but they've had their wages cut dramatically, some temporarily, some permanently. And then you still have just the broad unemployment rate is north of 13%. People see this world that they're living in as the haves and have-nots. If you have financial assets, you're good to go. If you're a CEO of a company, you're fine. But so many other people are struggling. What happens?
Yeah, there's right now, some of the polling you're looking at is between 60 and 65% of folks are saying that they don't know how they're going to pay their bills this month. There's a lot of concern out there. You also look at people's concern about the economy. 86% of Americans right now are very concerned about the economy. And one thing that I find really interesting about markets right now is up until now, over the last 4 years, consumer confidence has pretty much tracked with market performance. At this point, we see that that most Americans are very, very concerned, and yet the market is going really, really high. So I think there's some confusion now about, are we getting ahead of ourselves? And it is somewhat different in this moment than we've seen before.
But yet again, if you're trying to be safe and careful with your money and you're a saver, guess what the Federal Reserve did to you? Well, it's a word I can't use at 6:11 in the morning. Thank you, Ken. Great to see you. Ken Mahoney. Take care. Come back soon. We're just getting started this morning, everybody. Former Speaker of the House.